India could soon make UPI payments even faster. The National Payment Corporation of India or NPCI is considering a new feature called UPI Checkout or UPI Meta, which would let users pay with a single click without choosing a UPI app every time they shop online. But several companies including Paytm, CRED and Flipkart Super.money have opposed the proposal, warning that it could reduce competition in India's digital payment market. So why are companies objecting to something that appears to make payments actually easier? Hi, I'm Nupur and you are watching Control Z, your cheat code to navigating adulthood. First, let's understand what NPCI is really proposing. Today, when you buy something on an e-commerce website and choose UPI as a mode of payment, you are usually asked to select an app to pay from, like PhonePe, Google Pay, Paytm or any other provider. Under the proposed UPI Checkout framework, you would save your preferred UPI account just once. So the next time you shop on that website or app, you would simply authenticate the payment using your UPI PIN or biometric verification without selecting any payment app again. It would work much like a saved credit card or a debit card during online checkout. So where does the controversy begin? See, several Indian fintech companies have written to NPCI saying that this system could actually strengthen the dominance of biggest UPI players. Here's why. Today, every online purchase gives users a chance to choose between different payment apps at the time of checkout. But if your preferred UPI app is saved once during the first transaction, most people are unlikely to change it later. Now, smaller payment apps argued that this would make it much harder for them to attract new users, while giants like PhonePe and Google Pay, which already account for roughly 80% of UPI transactions, could become even more dominant. The companies have asked NPCI to hold wider consultations before moving ahead with this proposal. Now comes the question that matters to most people. How does this affect you? See, if the proposal is approved, your online UPI payment could become quicker and involve fewer steps. You would no longer have to select your preferred UPI app every time you check out on a shopping website. For consumers, that means greater convenience. But there's another side to this debate. If fewer people switch between payment apps, competition would weaken over time. And when competition reduces, innovation, cashback offers, rewards, and new features may also become less frequent. That's exactly what the smaller fintech companies say they are worried about. The debate also comes at a time when NPCI has been trying to reduce concentration in the UPI ecosystem. It had earlier proposed that no single UPI app should account for more than 30% of total transactions, but implementation of that market share cap has been repeatedly delayed and is now scheduled for December 2026. So here's the bigger picture. This isn't really a debate about one-click payment. It's a debate about the future of India's digital payment ecosystem. Should UPI prioritize maximum convenience for users, or should it ensure that smaller payment apps continue to get a fair chance to compete? The answer could reshape how hundreds of millions of Indians make digital payments in the years ahead.